Imagine this. Your heart is pounding so loud you can hear it in your ears. Your palms are sweating, making the mouse feel slippery under your hand. On your screen, a red candle is dropping. You're watching your hard-earned money, the money for your rent, your groceries, maybe even your kids' school, evaporate in real time. You want to close the trade, but you're frozen. You hope it turns around. You pray to a market that doesn't have ears. And just like that, you've already lost, even if the price hasn't hit your stop-loss yet. You've lost because you care too much. If you've ever felt that pit in your stomach, you aren't a bad trader. You're just a human being trying to do something that goes against every single survival instinct you were born with. Today, we are going to talk about the invisible wall standing between you and the life you want. It isn't a better indicator. It isn't a faster computer. It is your relationship with those little green and red numbers on your screen. We're going to learn how to stop seeing money as survival and start seeing it as just another tool, like a hammer or a screwdriver. Think about a high-stakes surgeon. When they are in the operating room, they are working on a human heart. If they stop to think about the fact that this person has a family, a life, and a soul, their hands might shake. If their hands shake, they fail. To be world-class, they have to develop a professional coldness. They focus on the stitches, the pressure, and the procedure. They focus on the process, not the person. Trading is exactly the same. The moment you start thinking about what the money can buy you, the new car, the debt you want to pay off, you've already invited the shakes into your room. Why is this so hard? Well, we have to look back thousands of years. Our ancestors lived in a world where losing resources meant death. If a caveman lost his stash of food, he didn't just have a bad day, he didn't survive the winter. Your brain is still that caveman. When you lose $500 on a Bitcoin trade, your ancient brain doesn't see a digital transaction. It sees a threat to survival. It sends out cortisol and adrenaline. It puts you in fight or flight mode. But here's the problem. You can't fight the market, and you can't run away from a digital chart. You're stuck in a state of panic, and panic makes people do very, very stupid things. Most people come into trading because they want freedom, but they end up becoming slaves to their P&L screen. They check their phone every 30 seconds. They wake up at 3 a.m. to see what happened in the London session. This isn't freedom, it's a high-stress prison. The irony is that the more you need the money, the harder it will be to get it. When you need to win, you become tight. You cut your winners too early because you're scared the profit will disappear. You hold your losers too long because you can't face the death of your resources. To win, you have to play the game like it's a simulation. Imagine you're playing a video game. You have 1,000 gold coins. If you lose 10 coins, do you cry?
No.
You just try a different strategy to get past the level. You need to treat your trading account like those video game coins. It's just score. It's a way to keep track of how well you are following the rules. The moment you move that money from the score category back into the rent money category in your mind, your performance will tank. Let's talk about the pain ratio. Scientists have found that for humans, the pain of losing something is twice as strong as the joy of gaining something. This means if you win $100, you feel a little bit good. But if you lose $100, you feel twice as bad. In trading, this is a recipe for disaster. If your emotions are twice as loud when you lose, you will naturally try to avoid losing at all costs. But losing is a part of trading. It's the cost of goods sold. A restaurant owner doesn't cry when they have to buy chicken and vegetables to make a meal for a customer. They know they have to spend money to make money. As a trader, a loss is just a business expense. It's not a mistake. It's not a failure. It's just the price of the ticket to stay in the game. If you find yourself moving your stop-loss or averaging down on a losing trade, what you're really doing is lying to yourself. You're trying to delay the pain. You think, if I don't close the trade, I haven't really lost the money. But the market doesn't care about your feelings. The market is just a giant machine that moves from one price to another. It doesn't know you exist. It doesn't know you're a good person. It's not out to get you, but it's not here to help you either. It's just there. So, how do we fix this? How do we become like those robot traders who don't seem to care? The first step is size. This is the most boring advice in the world, And it's also the only advice that actually works. If a $100 loss makes you sweat, you shouldn't be risking $100. You should be risking $10. Trade so small that you truly, honestly, deeply do not care if the trade hits your stop loss. If you can't walk away from your computer while a trade is open, your position is too big. You're gambling with your nervous system, not your capital. The goal is to make trading boring. If you're looking for excitement, go to a theme park or watch a movie. Trading should feel like data entry. It should feel like working at a grocery store checkout line. Oh, a buy signal? Oh, a stop loss. Scan. There is no drama in a grocery store when a barcode doesn't scan the first time. The clerk just tries again. That is the level of emotional flatness you need to achieve. Another huge trick is to separate your survival life from your trading life. If you are trading with the money you need for next month's car payment, you are doomed. You will never be objective. You will see every tick against you as a personal insult. You need to have a fortress of solitude, a savings account that covers your life for at least 6 months. Once your life is safe, your trading account becomes a playground for strategy, not a lifeline for survival. One of the most powerful things you can do is stop looking at the dollar amount. Many professional platforms have a setting where you can see your profit and loss in points, or pips, or percentages instead of dollars. Turn that on. If you see you are down 1%, it feels like a math problem. If you see you are down $500, it feels like a broken refrigerator or a lost weekend trip. The more you can turn your screen into a math problem, the better you will perform. You also need to stop judging your day by how much money you made. This sounds crazy, right? Isn't the point to make money? Yes, in the long run. But on any given day, the market is random. You can do everything perfectly, follow every rule, wait for the perfect setup, and still lose money. That is a good loss. On the other hand, you can break every rule, gamble like a maniac, and win $5,000. That is a bad win. If you celebrate the bad win, you are training your brain to be a gambler. Eventually, that luck will run out, and you'll lose everything because you never learned the process. Judge yourself by how well you followed your plan, not by the balance of your account at 4 p.m. Imagine 2 traders. Trader A makes $10,000 in a month but spent the whole time screaming at his screen, losing sleep, and breaking his rules. Trader B makes $1,000 but followed his plan perfectly and felt calm the whole time. Trader B is the one who will still be trading in 5 years. Trader A is a heart attack waiting to happen, and his account will eventually hit zero because he is hooked on the outcome, not the process. To get to that level of detachment, you have to train your brain through repetition. Think about the first time you drove a car. You were probably terrified. You gripped the steering wheel so hard your knuckles turned white. You were overwhelmed by the mirrors, the pedals, and the speed. But now, you probably drive while listening to a podcast, thinking about what's for dinner. You're detached. You've done it so many times that the danger has become routine. Trading is the same. Your first 100 trades will be emotional. Your next 100 will be a bit better. By trade 1000, a loss shouldn't even make you blink. But you have to survive long enough to get to trade 1000. Let's try a mental exercise. Imagine you have a coin. If it lands on heads, you win $2. If it lands on tails, you lose $1. If I tell you we are going to flip this coin 1,000 times, do you care if the first flip is tails? Of course not. You know that over 1,000 flips, the math will make you rich. You'd be happy to flip that coin all day long. In trading, your strategy is that coin. A single trade is just one flip. It means nothing. It's a tiny grain of sand on a giant beach. When you stop looking at the grain and start looking at the beach, the stress disappears. A lot of people think they need more discipline. But discipline is just a result of having a clear plan that you actually trust. If you don't trust your plan, you will always feel the need to interfere. You'll tweak the trade while it's running. You'll feel like it's going to turn around. Trust isn't something you just have, it's something you earn. You earn it by backtesting, by practicing on a demo account, and by seeing the math work over and over again. Once you know the math works, The need to be right fades away. The professional doesn't care about being right. They care about being profitable. Those are two very different things. Being right is for your ego. Being profitable is for your bank account. The ego wants to hold a losing trade until it turns green just to say, "See? I knew it would go up." The profitable trader says, "I was wrong. Here's my $50 exit fee, moving on to the next opportunity." They don't take it personally. If you want to change your life through trading, you have to stop treating it like a job where you get paid for your time. In a normal job, you work 8 hours, you get $200. In trading, you can work 8 hours and end up with negative $500. This breaks most people's brains. They feel like they've been robbed. But you aren't being paid for your time. You are being paid for your ability to manage risk and remain calm while others are panicking. You are a risk manager, not a chart watcher. Let's talk about the boredom goal. One of the best signs that you are becoming a professional is when you realize you don't have anything to talk about when friends ask about your trading. Amateur traders have wild stories about the big one or the time they almost made a fortune. Professionals just say, "Yeah, it was okay. I took 3 trades, hit 1 profit, 2 losses." Following the system. Boring. That boredom is where the money is hidden. Excitement is the tax you pay for being an amateur. If you're watching this and you're in a slump, or if you've just blown an account, take a breath. You aren't a failure. You've just been trying to fight millions of years of evolution with a mouse and a keyboard. The caveman inside you is trying to protect you, but he's doing it in a way that's hurting your future. Thank that part of your brain for trying to keep you safe, but tell it that it's not needed here. Tell it that these are just digital points, and that the real you is safe regardless of what happens on the screen. Start small. Tomorrow, don't try to make $1,000. Try to make $0, but follow every single one of your rules perfectly. If you end the day at $0 but you didn't move a stop loss and didn't overtrade, give yourself a standing ovation. You've just done something that 90% of traders can't do. You've mastered yourself. And once you master yourself, the market eventually hands you the keys to the vault. Success in this game isn't about the perfect entry. It's about the perfect exit, and the most important exit is exiting the emotional roller coaster. Step off the ride. Look at the numbers for what they are, data. Look at your losses for what they are, business expenses. Look at your wins for what they are, the result of a boring, repetitive process. If you can do that, you won't just be a better trader. You'll be a more focused person, a calmer parent, and a more disciplined human being. Trading is the ultimate mirror. It shows you exactly who you are and where you are weak. Don't be afraid of what you see in that mirror. Use it. Fix it. Grow. The market is open. The candles are moving. But for the first time, your heart rate is steady. Your hands are dry. You aren't hoping. You aren't praying. You're just trading. And that is when the magic actually starts to happen. Keep your eyes on the process. Keep your heart out of the P&L, and I'll see you at the finish line.